Hi there. Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Gwen Preston, Vice President, Investor Relations with West Red Lake Gold Mines. Trades on the TSX Venture Exchange with the ticker WRLG. How you doing today?
I'm doing well. I'm doing very well. We obviously put out a big piece of news this morning, and it always feels nice to get that out into the market so we can talk about all the things that we've been doing.
Yes, congratulations. I know last time we'd spoken, there was a mention of a pre-feas, and you guys have gone and announced that this morning. So it'll be a little bit of time before the full report, but you put out the highlights. We're going to unpack that here in a little bit. Maybe before we get into that, why don't we do our 60-second stock pitch? We'll get it out of the way if that's all right.
Absolutely.
All right. Well, some easy ones. What's the name and stock ticker of your company?
West Red Lake Gold Mines, WRLG on the TSX Venture and WRLGF on the OTC.
And what is the mission and vision of the company?
The mission and vision of the company is to become a mid-tier gold producer. The first phase of that vision is to put the Madsen Gold Mine successfully back into production. That starts with the mine plan that we put out this morning, which is why it makes sense to restart it now. And then it continues, in our belief, with what we see as potential to grow well beyond this mine plan. We expect Madsen to be the first mine in our stable.
Approximately how many shares are outstanding?
There are 317 million shares outstanding.
And who are some of the major shareholders?
Yeah, so we have the biggest shareholder is Sprott Resource Lending, and they are part of the Sprott family of organizations. They are from whom we bought the Madsen mine because they ended up owning it because they had loaned the money to build the mine to the prior operator. So Sprott Resource Lending owns 19% of our company. Frank Justra is a major shareholder and was one of the ways that this company got going for sure. And then we have a good selection of sort of long gold oriented funds, Van Eck and Ruffer and Excellent and Commodity Discovery Fund, Prime Vest Capital. We've got a nice selection of long gold funds in there. And then, of course, management has about a 3% stake in the company.
Hey, are you fully funded for the next 12 months?
So that's a very pertinent question to a company that is about to put a gold mine into production. And so just a few days ago, at the beginning of the year, we announced the close of our US $35 million debt facility. And that plus the financing that we did October, I believe it was, beginning of November last year. That is the money that we believe we need to get this mine into positive cash flow. So yes, we are well funded.
What are a couple of short-term catalysts?
Woo! So getting this pre-feasibility study out, that's absolutely one of them. And then now we are just pushing forward to production. I'd say the most important catalysts in the next little bit are watching the bulk sample stockpiles grow on surface. As they grow, we'll be able to report some initial results from that bulk sampling program, sampling from around where they are taking samples from the stockpile. If we can demonstrate that we're able to mine material of the grade that we say it's going to be, that will be a very important accomplishment. So watching those bulk stockpiles grow, turning on the mill, processing those bulk samples, and then reporting results from that's all going to play out over the next 3 months. And those are really important set of catalysts. And of course, once that mill is going, that is a big step towards just putting this mine into production.
Approximately what's your market cap?
Our market cap is about 185 million Canadian.
Excellent. Thanks very much for answering those. Now on to our regularly scheduled programming. For some of my viewers who don't know you, maybe you could just talk a little bit about how you got involved in mining, a little bit about your background and career to date.
Yeah, for sure. So, I've been in this mining sector for quite some time, longer than I might want to admit. It's probably been 18 years now. And my backstory until April of last year was as someone who invested in and wrote about, analyzed, investigated stocks in the space and tried to find the best investment opportunities in the sector. I did that as a journalist, and I did it as a newsletter writer for 10 years up until April of last year. I had a newsletter called The Resource Maven. And so I spent a lot of time trying to figure out what what stages of companies, what kinds of deposits, projects worked at what stage in the market. One of the conclusions that I really came to was that putting gold mines into production is a pretty good way for investors. Owning a stock while it puts a gold mine into production is a pretty good way for an investor to make some lower risk returns in the gold space, and good ones as well. And so then when the opportunity came up to join West Red Lake and help tell the story of what this company is doing, I jumped at it. And so I've been here now for 2/3 of a year, and I'm loving it.
Excellent. And, we touched on a little earlier, you had some very important news sort of out this morning that you've completed your pre-feasibility study. The report's going to be out, if I'm not mistaken, probably about 45 days, the full report. But you guys announced some of the highlights. Would you mind sort of sharing some of those highlights with us?
Absolutely. Okay, so this is the pre-feasibility study. I think of it as sort of a pre-feasibility plus, in that, pre-feasibility studies usually come out once you have, gotten confidence in your resource and you're ready to go past the dream sheet, so shall we say, that is a preliminary economic assessment, a PEA, and you get to a PFS. That usually happens before the mine is permitted, built, financed, or in operation in any way. We have flipped that, right? So this mine is built, it is permitted, we've been underground operating for 16 months. So it's a PFS plus in that the costs in this thing are real. They're either already done in terms of the capital investment to build because it's already built, or the costs for operating are realized. They're what we have been needing to spend over the last 16 months as we've driven new tunnels to access areas for drilling, to set up for mining. So it's a really confident PFS in terms of costs, which I think is very important because those have to be estimates a lot of the time with a PFS study. So it's a PFS study. It is the study upon which we will operate this mine, and it's got some very robust numbers in it. So 7-year mine life over the 6 full years of production therein, we're kicking out almost 70,000 ounces of gold a year and making 70 million in free cash flow each year for those 6 years of production. Of course, 6-7 years of production is a short mine life. It's really important for investors or interested parties to understand that this is the restart plan. This is the initial opportunity. This is the first mining opportunity at Madsen. We see a lot of opportunity beyond what we were able to define and put into this reserve, into this PFS plan. We've only been operating on site for 18 months. We've only been able to get this much of it into the mine plan. But getting this mine going unlocks the opportunity to turn it into more, because there really is. This mine has operated a few times in its upper levels. Once you get deeper, it's really untapped. And we think that there's a lot of big, meaty, high-grade opportunity at depth. And that's the opportunity that we are going to be able to unlock once we've got this mine going. But what's great is that getting the mine going makes sense on its own. $70 million in free cash flow each year makes sense on its own. So that's sort of the headline of this PFS result.
Excellent. What sort of, can you get into a few numbers? Like, what's your all-in sustaining cost? What's your IRR? How long is sort of payback?
Absolutely. So the IRR is, we actually didn't highlight it in the news release because our capital spend to get to production is so tiny. We only need to spend another $44 million. I realize that in the grand scheme of life, $44 million is a significant number, but in the grand scheme of mines, it is not a large number. And so the IRR ends up being 255% because the initial capital that you need to spend to start making money is really the denominator in an IRR calculation. So since when your denominator is low, your answer is going to be really high. So 255% IRR post-tax, nice number, but not one that we're leaning into because we've come at this in an odd way. We bought a mine that was already built, and then we did have to raise a bunch of money in the market and put it into the ground, into the asset over the last year. So we've set ourselves up with the work that we did and the capital that we spent over the last year to have a phenomenal IRR. The all-in sustaining cost is $1,680 per ounce. Now, is that high? Is that low? I would say that it's pretty much in line with similar operations. If you look around at similar high-grade underground narrow vein gold mines in Canada, and you look at their actual, not their PFS cost, but what is actually costing them to mine their gold today, our number is only modestly higher than that. And I'm going to go back to the idea that this is an initial mine plan here. This initial mine plan, the group that we worked with to develop this PFS, which was SRK, they used a very conservative gold price when they were determining what of our resources were going to be included as reserves. They used a gold price that was only $1,860. So I think in today's gold price environment, it's fair to say that that's a highly conservative reserve cutoff number. So using a conservative reserve cutoff number like that did reduce the number, did mean that a fair bit of our resource, 1.1 million ounces of our resource, didn't officially turn into reserve in this mine plan. So you can look at that as something not great, or you can just look at that as opportunity that exists just down the road, because we really believe that a good chunk of that 1.1 million resources that is currently outside of reserve will be pulled into the mine plan through the practical application of a higher reserve cutoff price, and by having a bit more time to do things like drill the gaps between this pot of resource of reserve and this pot of reserve of resource that didn't make it in. And if you define a bit in here, then it does make sense to develop over to this other big chunk of resource, right? So a little bit more drilling in untested gaps, or drilling that expands a resource area that didn't make it in and makes it meatier. We don't think it's going to be, we can see the path. We can see how to likely pull a good chunk of those resources into reserves in a future mine plan. So I think that explains the all-in sustaining cost. Right now, it's just a little bit higher than similar operations, but not a lot higher. And we're very comfortable with it as our initial mine plan cost, with the belief that we're going to be able to bring that thing down.
So approximately how many ounces are included in the plan?
So the total production over the life of mine it averages 63,150 per year over the 7.2 years of mine life. Of course, there's a ramp up year and a stump year at the end right now. So the 6 full years of production, it is 67,600 ounces of gold a year. So it's not a huge mine, but it makes good money, and the mineralization that it's tapping, the head grade at the mill is expected to be 8.2 grams per ton. So that is obviously a big driver of why this mine makes sense.
And there's over 1 million ounces that didn't get included in this pre-feas, right? You have to do some more work. There has to be planning and whatnot, but there's quite a bit of resource that you guys have that's not included in this initial mine plan. Is that correct?
Yeah, absolutely. That's that 1.1 million ounces of resource that didn't come into the reserve. And we really see a lot of opportunity to pull that in. But like I say, we're not going to mine based on a 1680 cutoff for deciding which of our resources are economic. We're going to mine based on what is economic to mine. So that changes things in reality right now, in terms of what we are going to do on site. And then we do think that and we're starting this work already in 2025. If we have a chat with Will, our exploration VP at some point, I'm sure he could tell you all about the areas that he's targeting for drilling with this in mind, closing some of the gaps between, to pull resources that didn't make it into the mine plan, just to pull them in so that there's mineralization between, and be able to pull them into the mine plan in the future.
Well, you're on the first line of defense here. Your phone will ring off the hook. I'm sure it has been already.
Oh yeah.
What's some of the feedback that you've heard on this initial PFS?
I think it hasn't been. I don't think there's been anything in it that's particularly surprising to people. Madsen is a pretty well-known asset. We have done a lot of work to try and set the stage for what this PFS was going to be. We didn't want people to expect it to be as rosy, bright, shiny as our predecessor perhaps presented the mine as, because we understand the realities of what it is to mine in Red Lake. You have to mine the deposit that you have. And someone asked me this morning, would you be more confident in your potential for success if you slowed down and took more time? And I really like that question, because that is a question that we have discussed from several different angles in detail as a management team over the last few months. And the answer is no. What a few more months, or, not doing the pre-feasibility study for another year might have improved the numbers in the pre-feasibility study. It probably would have allowed us to pull more reserves in and make the numbers bigger in the study. But it wouldn't have changed our confidence in what we're going to be able to mine in the first year and a half. And what I mean is, we have 18 months of stope by stope mineral inventory designed, engineered, and ready to go. That isn't going to change. That is ready. And so the point of West Red Lake is to become a gold producer, because we want to deliver new gold production into a rising gold market, because we think that that is what generates the best returns for investors. And so it makes sense to start this mine now. And we are confident that we have defined the mineral inventory to do that over the next 18 months. And that 18-month plan will just continue to roll. And while we roll along that 18-month plan, we will also build up the rest of the mine plan and hopefully be able to operate this mine longer and bigger than this initial mine plan lays out.
Excellent. Thanks very much for kind of covering that. Any other sort of significant kind of updates or things that you kind of wanted to touch on since we last chatted? We chatted in November. I think we were over in Zurich.
In Zurich, yeah.
Attending that conference together. And thanks for sitting down with us then. Anything else sort of significant that you'd like to touch on?
Yeah, so for sure. And on I think it was the 2nd of January, 6th of January, 2nd of January, we put out, we announced that we closed that debt facility that I mentioned at the beginning of our conversation. So we announced that debt facility with Nabari. I think it was back at the end of October, and it did take 2.5 months to get that sucker closed. Which some people were wondering why it took seemingly a long time. It just takes a really long time to get through all of the technical information sharing that is required for two parties to be comfortable to enter into a deal like that. I mean, I described it to somebody else as Nabari needed to understand our data and our plans at Madsen almost as well as we do. That takes a long time. And so we got through that work. And what's really important is that now we have access to US $35 million of debt. We know that the Madsen project can sustain that debt load. It's a nice debt facility in terms of it's designed to help Madsen succeed. It's reasonable cost of capital, and there's some very nice components to how it's structured. Like, we don't repay any principal for the first, I forget the number, I think it's 18 months. And importantly, a full half of principal is not due until a bullet payment at the end. So we really like it as a debt, as a debt structure. And most importantly, it means that we have the money in the bank right now to finish the work and get this mine restarted, which is, that's the most important thing at the end of the day.
Very exciting. So I know when we first chatted, right when you kind of jumped in the role, 2/3 of, or I guess three quarters of a year ago here back in April, you're pretty excited on the golden runway, near-term sort of gold producer. Are you still as sort of pumped today as you were back then?
I am. And I think the thing that has really settled in for me as I've, over the last 8 months, is that there's very few other gold mines starting production this year, like especially high-grade gold mines. There's just like none. And so if we get this gold, if this gold market continues to be what it has been and what it's developing to be, I mean, I can't but believe that investors who are interested in gold, and there's got to be more and more of them over the next year, they always end up looking for new production. because that's where there's additional leverage. And there's just very few stories out there that fill that need. So yeah, I am. I'm just as amped on it as I was when I started.
Excellent. And maybe we can get into a little bit of macro talk. So, we see online a lot, especially with Frank Justra, a discussion about gold, sound money, hard asset, real money, and then maybe, he's not as up on sort of crypto. However, from an investor standpoint, that darn crypto really seems to be interfering with some of our mining stocks. Any thoughts on that, being so involved in sort of the mining industry and here with a company that's like poised and nearly there to like start up a gold mine?
Yeah, I mean, for sure. Over the last, I forget how many years this conversation has been going. I think for a long time at the beginning, there was a lot of resistance in the gold sector from people, participants, to sort of believe or accept that crypto is a competitor. It's undeniable. Crypto is a competitor. I think that there's always some forms of competition in terms of how you hedge your exposure in the market. And I mean, that's what crypto is, right? It's an alternative. It's a hedge. It's a diversification. And it's new and it's exciting. And so that it's certainly attracting a lot of attention relative to, gold, which is still in some ways considered sort of old. Two comments on that. I think one is that there's increasingly just awareness out there of, the overwhelming debt burdens especially at national levels, right? And I mean, I think of this, Donald Trump is going to be the president of the United States. So, Republicans are coming into power and their stated plan is this time, and usually is, to sort of cut spending, trim the fat, all of those things. But the reality of that challenge, I think, is pretty apparent to people. There's not a lot that can be done when you're in a debt situation of this nature. When you have all of the commitments that you have and you have so much debt, you just don't have a lot of options for how you can reduce spending. And so even amongst the most ardent Republicans, I think that there's a real understanding that the debt train has left the station and is rolling. And the more that understanding sits with people, is discussed, comes to surface. I mean, gold has for many, many years been the answer to that challenge, right? And it doesn't have to be the only answer. It's okay for crypto to also be an answer. Sure, as a gold investor, I wish it was the only answer. It would be silly otherwise. But it's okay that it isn't the only answer. If that question keeps coming to the fore more and more, then as long as gold is an answer, then it will benefit from that. So I think that's really important. The other side of things in terms of gold and the market is the disconnect, of course, between the gold price and gold equities, right? And that's, to me, more concerning because the gold price is fantastic. I have no complaints about the gold price above 2,600. My goodness, that's phenomenal. Why are gold equities so disconnected from the gold price? That's a bigger question. I think what that really is that investors haven't had the need to search for alternatives, equity alternatives. Their stock portfolios have been doing just fine. And so as much as they are interested in hedging some of this macro risk, maybe through owning gold, they haven't been given a lot of reason to hedge their stock portfolio. And sure, those things do come together, but they aren't that close together yet. And so I think that's been the main thing. And since there hasn't been a lot of drive to hedge their equity portfolios, they just haven't been looking. They haven't, gold equities become interesting when investors are looking for something else. And they just aren't looking for something else. When might that happen? Well, at some point, the gold price will make cash flows at gold miners they're already very strong. That is starting to increase interest in the gold stocks. And I think that will continue because I do believe we're going to get a stronger gold price over 2025. At some point it tips. I don't know what point that is, but so I'm optimistic that we are going to get increasing interest in gold equities just because of this phenomenal gold price. Of course, if reason arises for investors to want to hedge their stock portfolios, that will redouble the amount of interest in gold equities.
Great. And when are you guys going to restart production? When will we see cash flow?
When's the gold coming?
Yeah, you're one of 4 stocks that I own that was down over 2024. Only 4 out of a fairly large sort of portfolio. But I'm still there because you guys are sort of on that cusp, and
Yeah,
development stories are pretty notorious for trading sideways or down until you sort of get somewhere. It's
absolutely.
always you got to prove there's a mine, prove you can get it into production, prove that you can do it for the cost that you say that it's going to cost. And you guys, had a bit of a unique situation where you were taking on somebody else's kind of mess, and you had to reinterpret it. It looks like it's an amazing asset based upon some of the initial sort of pre-fees highlights, and it looks like it's going to be as initially kind of robust as what you guys had internally been sort of speaking about for quite some time. So that's exciting. But when as investors will we, as shareholders of the company, see that you guys will actually generate some revenue?
Yeah. So, we want to turn on the mill in March, want to process that bulk sample. That will produce gold because that's the reason that we're doing it. There's gold in those rocks. And then we want to just roll into production mining. We don't plan on blaring the trumpets and saying, we're starting production. We plan to just roll in and do it. And certainly, 800 tons per day is our, average throughput in the full production years. And when we get to about half that level, that's when the mine starts making money. 400 tons per day is when the mine starts making money, maybe 450, right around that level. And so we don't think it's going to take us very long to ramp to that level. So I don't want to put a date on it,
Sure.
but it's
We're getting close.
Q2, Q3, it's in that range, right? It's like in the middle chunk of the year.
Excellent. And are you guys, looking at other sort of like acquisitions, other sort of projects, other strategies for, expanding? Any other sort of M&A sort of events that might happen even internally within your office?
You asked at the beginning what the vision of the company is, and the vision of the company is to become a mid-tier gold producer. And we're not going to be able to become a mid-tier gold producer with just Madsen. Madsen, we think, can become a bigger mine than what we've outlined this morning, but it's not going to vault us into mid-tier gold producer status on its own. So M&A is absolutely part of our DNA. We look at opportunities all the time, and so we're active on it for sure.
Excellent. Well, any sort of final thoughts you'd like to leave us with?
Thanks for chatting today. I really love the opportunity to help people understand, like, this is Madsen makes sense to restart today. The numbers prove that Madsen makes sense to restart today. But don't focus on the short mine life, because this is how we get started, and the justification that it makes sense to start now in this gold environment. And we really believe that given more than 16 months on the ground, which is all we've had, that we will be able to unlock further opportunity and make this thing bigger and longer lived than the study that we outlined today.
Well, I read through the highlights, and I was, I was excited. I'm excited for me as a shareholder, excited for you guys as a company. Some good initial numbers. You can't really say it, but I'll say it. You tend to like get into these things and get started, and then typically with an underground operation, you're going to be mining additional faces and stopes and things like that, and so it will get bigger. You're not going to just stop production because the report doesn't say so.
Yes.
You'll be able to
Exactly.
likely add to that. So I thought it was a very, very realistic, good, confidence inspiring sort of initial report. I look forward to actually reading the full report, but having a jump off the page IRR, and having appropriate sort of, again, fairly conservative all-in sustaining costs, and knowing that how tight you sort of drilled and spaced in order to get these reserves. I thought it was fairly competent, very, very positive, and I was excited by it. So excellent, good. And I know that's something you said you were going to deliver, and you delivered it on time. So thank you very much. Look forward to catching up with you here in the next quarter. You got a lot on the go, I would imagine, a bunch of mining conferences, kind of
Oh,
that
yeah.
mining season, we're after the holidays and you get into it. What are some of the conferences that you'll sort of be attending?
Yeah, for sure. I'm sure we'll see each other around in the next little bit. So Shane and I are jumping on a plane tomorrow to go to the Canadian Mining Hall of Fame dinner that's happening in Toronto on Thursday because Frank Giustra is being inducted there. So we are absolutely going to support our advisor and major shareholder at that event. And then we come back and it's straight into the Metals Investor Forum and the Vancouver Resource Investment Conference, both happening back to back in the middle of January. And then we're not officially participating in Roundup, but I'll certainly be around it, as is often the case. And then I believe we have a BMO conference in February, and then it's PDAC at the beginning of March. So it absolutely stays busy. And we're very glad for sure to have this study out so that we can give everyone the goods on what it is that we're going to be doing in 2025.
Excellent. Well, I really appreciate your time here today, Gwen. Thanks very much. Job well done on the PFS, and look forward to catching up with you after a few conferences, and we'll see how your bulk sample, turning on the mill, how that sort of goes. Look forward to that news. Thank you.
I look forward to talking about it. Thanks, Keir.